Silver's got a beautiful chart. As you and I know, we're in a time where I think silver, precious metals across the board are set to continue to push higher and potentially go really ballistic and take off over the next couple of months. But when we look at the short-term chart of silver, we've had a lot of different stuff, different patterns on different time frames unfold. But we just had this great big pause. We had a big rally up to this level, which, depending on where you want to draw this level, either way, it's a beautiful big pause, a consolidation, meaning that this is just a little bit of a temporary pause before it goes higher. And now we've seen it break out. We've seen it run higher. And now it's forming another bull flag pattern right here. We've had an explosive move up over the past 2 weeks. It's been trading sideways. This looks like a high momentum move, meaning we could see silver, based on this chart pattern, run to about $68, $69 an ounce. It could happen literally within 2 or 3 trading sessions based on this chart pattern. So we could see silver and metals have a big pop this week. So it's pretty exciting when we look at the chart, and using technicals. If we use Fibonacci extension, it gives us a good idea of just the short-term rally and this pullback that we've seen. It tells us where the next 2 upside targets are for silver. So $64 is the next upside target. Based on where price is right now, it's about a 10% move. And if we do have this 100% measured move, that's going to be around a 17, 18% move to the upside. So this could be a really nice explosive move in silver if it can get its momentum going over the next couple of trading sessions. And when we look at, I don't have it for silver, but silver and gold are pretty much the same. When we look at the seasonality chart, as you like to always pull up here, Craig, we're coming into that time of year, like pretty much right now, after the first week and a half of the year or of December, we tend to see precious metals want to go higher, and usually gold and silver move up together. And so we're coming into the sweet spot, not only for precious metals, but even for equities to have a final push higher. And so silver is really exciting because percentage wise, it's got a very big move, primed and ready. And as we can see from this last portion of this move, in more or less, it was 5 trading sessions, it kind of made, a very significant move percentage-wise. If we look at that move, it was about 24%. So I think there's some excitement just around the corner to end the year on a very strong precious metal note. I mean, if we use Fibonacci retracement, we could say, well, based on that move, the sweet spot will be between about 52.50 up to about 55.40. So right around this breakout zone that you just mentioned, right where this pink reddish line is. So that would be a healthy pullback range. The chart pattern right now is actually primed and ready to pop and really take off. This is a very high momentum move. So if it does pull back, I think it's an opportunity. If you're not long it right now, I think it's gonna move up here. So either way, all the time frames for silver and precious metals are bullish on all time frames to the upside. So at this point, it's in a very strong rally mode. You need to own it. I think right now we're seeing the precious metal space has really come to life. Everybody's kind of on high alert for it. So naturally, we're going to see money move into the more speculative side of things, which is why I think we've seen silver move first. People have moved into it quicker. It's a smaller market. They want to make higher returns. So silver's already popped and broken out. Gold is a little bit more conservative. It still has a very strong chart pattern. This is a huge run up. It's at a big pause. It is pointing to about $5,200 per ounce when all this unfolds. And right now, if we zoom in on the shorter term chart, we've got a very strong bull flag pattern, just very similar to silver. It's had a nice run up. It's had a pullback, and it's just showing that in the short term, while silver shows about a 17% move, gold shows roughly about a 6 or so percent move. And that's typical. Silver percentage wise moves a lot more when it has a run. So I think gold is a little bit slower moving. I find it's more accurate. I find I can win more trades with gold. And see, there's always a trade-off, right? Either you can knock some out of the park, have some huge gains, but you might not win many trades because they're a little more unpredictable, like silver, or you make lower returns, but you win more trades and it's less volatile. So there's two different characteristics between these opportunities. And gold's doing what it does. It's being a little more conservative. It's lagging a little bit at this point. I think money's looking for higher returns than gold, which is silver. And I think miners and platinum and palladium. I think there's money starting to figure out, trying to spread out, I think, in the precious metal space right now.
When I pull up the silver chart right now, it honestly feels like watching a coiled spring that's been compressed for so long that when it finally decides to release, the move is so violent, people step back and say, "Wait, is this real?" And that's exactly what we've been seeing. Those of you who follow my work know I look at price action like a map. Charts tell you where the footprints are. They don't tell you stories. They show you intent. And silver's current intent is not subtle. It's a freight train on a tight rail, and the momentum is so strong that if you're not on it, you're not just missing a trade, you're missing a generational shift. Now, when we zoom into silver's recent move, what we're seeing is picture-perfect market mechanics. We've got a monster rally, a clean consolidation, and a breakout that practically screams continuation. That consolidation wasn't weakness, it was fuel. Think of it like a marathon runner slowing down just long enough to catch oxygen before sprinting again. And the breakout from that structure is textbook technical analysis. It's the kind of setup traders dream about because it doesn't require imagination. It's right there. When silver broke above that consolidation band, we entered what I call the high momentum window, the zone where silver historically does its best impersonation of Bitcoin 2017, only with actual industrial demand behind it. And that's the key difference. Silver has fundamentals that make the technicals more than just lines on a screen. This is why when we measure this latest impulse move and compare it to the prior one, we get a Fibonacci extension that puts the next short-term target right around $64. And that's just the conservative leg. The 100% measured move, which patterns like this hit more often than people think, gives us $68 to $69 as the next upside window. And I'm telling you right now, that kind of move could literally unfold in 2 or 3 trading sessions, because silver doesn't believe in gradual, it believes in fireworks. When silver wants to move, it behaves like someone just flipped a switch in the algorithm matrix. 1 minute it's grinding and chopping, and the next minute you look away to refill your coffee, and it's blown through 3 resistance levels like they weren't even there. People ask me all the time, "Chris, why does silver behave so dramatically?" And I always give them the same answer. Silver has 2 governors, fear and greed. And when either one of them takes over, price goes vertical. When the greed side hits, especially during breakout conditions like we're seeing now, traders pile in not because they love the fundamentals, not because they're building a physical stack, but because they want to catch the rocket. They want volatility. They want asymmetry. And silver has it in spades. This current setup is exactly that. Asymmetrical opportunity compressed in a tight time window. And what's beautiful is that the chart pattern doesn't exist in a vacuum. Seasonality is backing it. This time of year, right after the early December chop settles, historically gives us a powerful rally in precious metals. It's almost like the market gets its winter caffeine shot. Gold rises, silver rises, and mining stocks start waking up like a bear who just smelled a steak cooking outside its cave. And this seasonality effect isn't theoretical, it's on the chart. If you pull up 30 years of December-January action, you see the same slope over and over. Price turns, trends, and pushes. So now combine this seasonal momentum with the technical breakout I just described, and you get a setup so compelling that even conservative investors start leaning forward in their chairs. But let's go deeper. Why is silver breaking out ahead of gold? That's not typical behavior. Usually gold leads and silver follows. Silver is the sprinter. Gold is the distance runner. But this time, silver is the one carrying the baton. And that tells you 2 things. First, speculative money is entering the sector. This is classic risk-on capital rotation. You see it when traders start looking for bigger percentage moves. Gold gives them steady returns. Silver gives them explosive ones. And second, industrial buyers are panicking. They may not appear on your chart, but their footprints are everywhere in the price action. Whether you're talking about solar panel manufacturers, EV battery producers, or electronics giants, they're seeing the writing on the wall. When silver supply tightens, industrial users switch from "we'll buy when needed" to "we better secure our allocation now" or risk production delays. That shift turns silver into something like a Giffen good. The higher the price goes, the more urgently it's bought. Every time momentum accelerates, the industrial users panic a little more. Traders buy the fear. Manufacturers buy the necessity. Investors buy the breakout. This is how you get sustained moves, and it's why silver is outperforming gold right now. Traditionally, when investors start piling into metals for macro reasons, gold gets the first inflow. But when investors, particularly younger ones, algorithmic funds, high volatility traders, want a big percentage gain, they pile into silver. And when silver begins outperforming gold, that's when you know the bull market has entered its next stage. And that's exactly what's happening. The gold to silver ratio has dropped from the mid-80s to the high 60s, a massive move in relative terms. And it's only getting started. Now let's talk about price structure for a moment, because this is where the story gets even more bullish. The big pause consolidation that formed after the initial breakout wasn't just a sideways range. It was what I describe as a momentum digestion zone. You get a huge impulse move. Then the market pauses because traders need to rebalance, institutions need to reposition, and sentiment needs to cool so buyers can reload. That consolidation was clean, contained, and structurally perfect. Not choppy, not erratic. That's exactly how strong bull continuation patterns behave. Once silver popped out of that zone, it triggered a classic breakout signal. And if you replay the tape on the chart, the breakout candle had all the signs of institutional buying. Long body, short wick, rising volume, and follow-through movement. This isn't retail Reddit traders moonshotting silver. This is professional money positioning early because they know what's coming. Tweets from trading desks started circulating everywhere. Posts like, "Silver finally waking up," or "$70 incoming." Momentum suggests yes. You know how X, formerly Twitter, gets when silver moves. One guy posted a meme of a rocket strapped to a kangaroo with the caption, "Silver heading to Aussie, $100 by Wednesday." It's nonsense, but it's how you know retail is waking up. And honestly, retail hasn't even entered the trade yet. That's the craziest part. The volume we're seeing now is warm-up volume. When retail actually catches the scent, when headlines start reading, "Silver hits $70, that's when the mania phase begins. Our job as traders is to be early. Not first, early.